Good morning all and welcome to today's video. So I have just the one pair on watch today and that is Euro CAD. So I'm going to break that down for you now. The price action on a lot of these other pairs looks like it needs a little bit more development. And I was just thinking about this a moment ago. Price can often do that when it is at these high areas of value for a buy or a sell. So if we just flip to the DXY, you can see if I just move this off of the chart, if I just move that off the chart, if we just drill down to the daily, you can see that price is at a very high area of value for a sell. It's at this standout liquidity point there, which just so happens to be, while we touch on it, it just so happens to be the 50% mark of this particular range. Okay, so these are potentially pivotal areas. These are potentially the lines in the sand, the line in the sand, if you were, as to, if price is going to move to the downside, which is what we're anticipating, those of us who trade the Falcon strategy, this is kind of the line in the sand. If it's not going to go from here, it is much more likely to start pushing up to these highs again. So I always think about these high areas of value for a buy or sell as like train stations, okay? Bear with me on this one. I've not gone completely left field. But the reason I think of them as that is if you've ever been on a train, and you will probably recall how when you pass through or stop at these minor train stations, very few people get on or off. Okay, so these towns or these villages that you've never heard of, when the train stops there, often nobody gets on or off, and then the train continues. I kind of think of that as like these more minor inflection points, like kind of, these little ones here, like that one there. When I think of the major, when I think of the larger, the big liquidity points like this one, I often think of, being from the UK, I often think of like, what do you call it? King's Cross Station, Paddington Station, Edinburgh Waverley here in Scotland. And when price stops at these major train stations, as I like to think of them, then lots of people get on or off. Okay, on and off. So price tends to hang around these areas for longer before rallying or selling off, so that more people can get on or off, and then the train can continue on its way. So I've always found it quite difficult to learn new things in life in general. So one of the things I did, even when I was at school, much to the disapproval of my teachers, was to try and analogize and contextualize things to help me ingrain them into my subconscious, which is what as traders we need to be doing. We need the process of repetition, and we need to see the same thing over and over again enough times for it to be ingrained in our subconscious. So that's one of the things I like to do. The big liquidity points are the major train stations, and the less visible they are, to me, they are the minor ones, where price tends to not hang around for as long. Hopefully that makes sense. Anyway, I've digressed a little bit, so let's break down Euro CAD for you. On the higher time frames, we have this sharp move down. I've talked about these before. When a move is sharp, we have a sharp move down, sharp move up. If you think about this as the kind of end of a drawing pin, if it were, or a tack, if you were, if it's a sharp move like that, then there is potentially a lot of liquidity here, which, if it's tapped into again, will rally or sell off on the flip side with a similar level of aggression. We push down to this area. As I was saying before, we do hang around in this area for quite a while. If you just count the candles, bearing that this is the weekly chart, we hang around for several weeks in this area with these kind of failed drives. We see price push up here, it fails, pushes up again, fails. And you can see even on the weekly chart that we typically get these three drives. So we get a first drive, second drive, and then the third drive is typically the one washes out all the previous drives, so breaks below this wick and this wick, taps everybody out. And as I've said previously, when we break, we typically break below these standout liquidity points if we're looking for longs, because to the bigger players, this represents a high area of value for a buy. if it breaks below. They're not seeing this unless there's been a material change, which we can see by way of the lower time frame structure. The bigger players are not seeing this when it breaks just below as as resistance. They're seeing it as a bargain area of value for a buy. And that's why in the majority of cases we see price rally to the upside with a similar level of aggression as it rallied last time around. Okay. Then we get the impulse correction potential continuation. The market tends to move in waves of impulse correction continuation. And as I've touched on previously, we tend to get these larger corrections, as you see here, about halfway within a range. So the range being potentially from here all the way up to here. And one of the reasons that I believe that is because we have a near miss. When price gets close to the area of value, it gets close, it pushes to the downside. I do apologize if you can hear my stomach. I must be especially hungry this morning, but I digress. That's probably something to do with the intermittent fasting that I do. And since we've got a bit more time today, because I've only got one pair on watch, I'm going to digress and talk a little bit about some of my processes, which most traders won't even consider, never mind talk about. So we have the near miss there, which will likely get filled. So we see these high areas of value. Price gets close. It doesn't quite tap into it. It pushes down. And then often we end up filling that high to either reverse from that area or form further continuation to push higher. So that's why I've got my ray line there. That is a positive confluence factor versus if we'd already tapped into that area. Okay, and then we have the same thing again. We have a standout area of liquidity here. Price scoops back down, doesn't quite tap into it, tries to go, and then we see this very corrective move up, which is typically caused by people trying to buy this whilst orders are still in this area and orders are being placed in this area. So you get this kind of pendulum effect, which causes price to move up correctively. So those of us who trade the Falcon strategy are always thinking about the nature of the market. And by the nature, I mean, how is price moving versus, where is it moving to? So for example, if we break a trend line, for example, if we just take this trend line here, seeing as it's already on the chart, if we break a trend line like this, nature theory dictates that we've broken it correctively. A lot of traders, you'll see this on TradingView, believe price is now going to rally to the upside. However, we believe it's going to push lower because it's broken it correctively, versus if it breaks it impulsively in a manner dictated by this arrow here, then we would be looking for a correction afterwards, a sideways correction, and then we would say, yeah, okay, price is potentially going to move higher. So that is nature theory in a nutshell. Okay, and you can see that we've just tapped into this area. Once again, we broke below. This didn't act as resistance, as many would believe. We break below, wash everybody out, shake out all the orders, and then we push up by way of this bullish high test candle. And you can see now we've got that kind of potentially the start of that morning star formation, which if this weekly candle was to close like this by the end of the week, could give price the impetus to push higher. So on the daily chart, you can see we have this 1, 2, 3, the 3 failed drives that I was talking about. First drive, second drive, which near misses here. Then we wash everybody out, break below all these lows, wash out all the orders, and then we have that impulse correction continuation. So with that in mind, I'll just be looking for the same thing today. So we have the impulse correction, impulse correction, impulse correction, just trying to ride the wave. We are at the 90% rule, so we are at the start of this piece of structure, and I am mindful of that, but the higher time frames hold more weight. So I'm not as concerned about this when the higher time frame is clearly dictating a move to the upside. So as I drill down to the 1 hour chart, I'm actually going to do this on the 15-minute chart, just because I think it will make a bit more sense. Now, I actually did this forecast just to show you that the patterns that we look for repeat themselves. I did this forecast last night, okay? So this one is an old forecast, so that can come off the chart. I did this forecast last night, okay? And price was here at the time, so I did this about 8:30 at night. And I was forecasting that this would potentially be the first point of a 1, 2, 3 drive into this area, And if that was to happen, then I would be looking for a risk entry. Okay, so a risk entry is essentially where we call the bottom. Now, there's a couple of things here that make me believe that we could potentially near miss this area again. Okay, so not tap into it. We are getting very close, and you can see price just starting to move to the upside potentially. Now, one of the things that makes me think that we might near miss this area again, push up and then come back down, is two things. I'm just going to take this forecast off the chart for a minute. In fact, I'm just going to, if I just take this off the chart for a second and keep the area of value on. There's two things, right? We have the first touch there, but we didn't really move away very much, okay? And typically speaking, as I said, we look for the three drives. We look for the first drive, second drive, and then the third drive, which taps into the area more often than not, tends to be the one to go. There's two things that make me think that we might near miss this area again. One is the first touch here didn't really push away, and when that happens, we often deem that these two touches to be kind of one touch because the first one didn't push away. The second one, if I just put the forecast back on the chart, is that we're kind of squeezing ever so slightly, and by that I mean that typically speaking, the structures that we look for are at least parallel, okay? And by parallel, I mean you can see the trend line there. We have this one which is sloping towards the other trend line, okay? So this is what we call a squeeze. Price is squeezing. So if it was parallel, it would look more like that. So that is giving me an indication. If I just take this off the chart for a second, this is something I don't think I've touched on, certainly not for a while. That is giving me a clue, particularly when we have a 1, 2, potential 3 touch in here. And you kind of see the same thing again here, where we have a first touch where we don't really push away very much. That is giving me a clue that potentially we will get something like this, okay, which takes us up to this area to give us a 1, 2, 3. That would potentially give us this more parallel structure. And if we push down from there, if we had that 1, 2, 3, and we push down from there, we would then have this more parallel structure. And potentially, given that this is EUR/CAD and it can go at the start of the London session and it can go at the start of the New York session, because obviously the Canadian dollar is a North American currency pair, we would potentially then have this, which then pushes down to here, which if you look at the time at the bottom of the screen would be about 12 p.m. And that's significant because that's the start of the New York session. And then we would have a 1, 2, 3 touch structure with equal spacing, okay? So typically speaking, the structures that we look for tend to have fairly equal spacing, okay? So then we would have that 1, 2, 3. We would have a parallel piece of structure. We would have the 1, 2, 3 here. We would have a 1, 2, 3 down here as well. And then this just becomes perhaps a little bit of volatility, and this is not really a push up. Whereas this would be the first drive, second drive, third drive, which would make sense contextually. So I hope you like that slight little variation on the theme, something slightly different, which I haven't done before. Of course, I have the alert set there. It looks like we just narrowly missed that. And as I said, if you look at how price is moving, it's moving down correctively. All in all, this is a corrective move down, which implies an impulsive move up, which may do what I've just said a minute ago. So one of the things I spoke about a moment ago, given that we've got so we shall see what that is my forecast for EUR/CAD today. So one of the things that people don't talk about as traders or consider is their processes. And you might think, well, what does that mean? If you've just discovered this on YouTube or you're new to the Falcon community, which I'm a member of, one of the things that people don't consider are their processes. Now, if we know that trading is 90% psychological, and a lot of people, this is something that I disregarded for quite a long time, and many of you might disregard that as well. We have a lot of highly skilled, technical, and very methodical people trading doctors, lawyers, all kinds of people that, are very, very good at getting their house in order when it comes to being methodical and organized, etc. If 95% of traders fail, which is the statistic which Mark Douglas comes up with in Trading in the Zone, is it because these people are just not very technically gifted? They can't master the mechanics of the market, which are not particularly difficult to master or certainly understand, right? Is that the case that these people are just not technically skilled enough? Well, no, because these are highly technically skilled people in other industries. So therefore, is it not reasonable to assume that their failings are psychological in nature? Well, yes, I would say it is. Now, what is one of the things that you can, if you can do certain things to improve your psychology. So, for example, something as simple as diet. Many people wouldn't probably even consider their diet. And there's certain things that I do. I've noticed that if I consume, this probably might be obvious to some of you, but if I consume a lot of carbs at lunchtime, my concentration and focus levels are not so good. Okay, immediately after, and for an hour, maybe an hour or two later. So one of the things I do is I monitor how many carbs I have. One of the things I do, which improves my sense of positivity and well-being. If you think about a lot of the psychological mistakes that traders make, they're caused by anxiety. Right now, anxiety can be caused by stress in other areas of your life. If you're stressed in other areas of your life, then you're likely to experience anxiety within your trading. So some of the things that I do, for example, first thing in the morning, I reflect on, as soon as I wake up, I use what we call the window of opportunity, and I reflect on things that I'm grateful for, and I reflect on the bigger picture. I reflect on my longer term goals. I visualize them before I get out of bed. That's one of the things I do. So I'm not in that anxious state. I'm not thinking about my problems in the morning. I'm thinking about things I'm grateful for. So therefore, if something happens in trading, I'm not particularly bothered, because my mind is already ingrained from my process in the morning to think about the bigger picture, to think about all the good things in my life. After I've done these videos, I then post it on YouTube, and then I go and work out. I do just over a half an hour cardio workout on the cross trainer. That gets me in a good level of flow. That gets me in a good state of mind, not in an anxious state of mind. And then what do I do after that? I then go and watch some content. So the Falcon community put out loads of content on a regular basis. I do that. I don't have breakfast. Okay, I found that eating in the morning affects my concentration. One thing that really helps with concentration and focus is intermittent fasting. So I don't eat from 8 p.m. until lunchtime the following day, which is probably why you may have heard my stomach rumbling. It's not normally this bad, and then I I give my dog a brush and a bit of a haircut sometimes, and I take him out for a walk. And one of the things I do when I'm out taking my dog out for a walk is I used to have music playing through my headphones. I don't. I get very present with nature. It might sound a bit hippie, but I just listen to things. I'm aware of, I'm present. I'm in the moment. If you're present and in the moment, that helps with your trading, because you're less likely to neglect or overlook certain things in the market if you're more aware of the things around you in your daily life. So when I'm going for a walk, I then eat at lunchtime. And then what else do I do? I'm going to miss things out here because there's not much time left. But I do various things. And then I take ashwagandha, which is in its powdered form, which comes from a tree in India, I believe. And I take that about an hour before I go to sleep. And that seems to give me a much deeper sleep. And what I've found since I started doing that about a month ago or 3 weeks ago is that I'm actually waking up an hour or two earlier. So I'm waking up with just over 5 hours sleep now. And I feel more refreshed and focused than I did when I was having, 6 or 7.5 hours sleep. So people think that you need a certain amount of sleep. I've learned this year that you don't. You need quality sleep. And ashwagandha is one of the things that has really helped me with that. And so that's another thing. All these things that I'm doing, people don't think about sleep when they're trading. But if you haven't had enough sleep, how are you going to trade effectively when it comes to larger capital? So I thought I'd go off on a little bit of a tangent, folks, to show you that trading is not all about technicals, and arguably that's only a small amount. But I hope you've taken some value from this, folks, and I will be back tomorrow with another video. Thanks for watching, and I will speak to you again soon.